Monday saw a gradual rise in Asian markets, with the tech sector in Hong Kong taking the center stage. Asian tech stocks, in fact, extended a blistering rally from last week, while Europe defense spending bets lifted stocks and bond yields. In fact, reports of discussions between Russia and Ukraine may start in Saudi Arabia, keeping geopolitics in the spotlight, and worries about the reciprocal US tariffs have subsided until April. The MSCI's Asian stocks gauge, excluding Japan, rose on Monday as investors were happy that significant tariffs had not been imposed yet. Japan's unexpectedly robust economic growth sent Tokyo's Nikkei edging slightly higher. However, a further increase in the value of the yen against the dollar curbed the gains. And the dollar, on the other hand, was steady around its 2-month low levels. U.S. markets, in fact, are closed for the President's Day holiday, also known as Washington's birthday. In Europe, defense stocks boosted indices in the region, with bets of an increase in military spending. The broader European stocks index rose, driven by defense names, with Germany's Rheinmetall jumping 6%. An index of European defense shares, tracked by Goldman Sachs, topped a record high. Bonds in the region, meanwhile, fell on expected increase in borrowing to fund for greater military spending, with the German benchmark hitting over a 2-week high. In commodity markets, meanwhile, gold gained a touch on Monday, driven by a softer dollar, and was trading near its record high after having rallied for 7 weeks straight. The yellow metal is inching close to $3,000 an ounce for the first time ever. Meanwhile, oil has had a tougher time as the prospect of peace talks on Ukraine is expected to greater supply from relaxed sanctions on Russian output. Still, benchmark Brent crude rose a touch closer to $75 a barrel. And the biggest hit to the so-called Trump trade is to cryptos this year. While the new U.S. administration is pro-crypto, Trump's trade tariffs rhetoric has the sector in a bind. For cryptos, the boost this year was expected to come from Fed rate cuts. However, crypto investors have been on the back foot amid rising uncertainty around tariffs and their macro impact on Fed's rate trajectory. To stay up to speed with the latest news, download the WION app and subscribe to our YouTube channel.